The following video that you're about to watch is a video that I sent out to my private group, pipsologyFX. Now, those of you who are on this YouTube channel or found me on Instagram know that I do two things. I have a group where I give out my trade ideas and I also educate. It is not a signal group. We're education only. So when you see people with profitable situations, testimonials, flips on their accounts or big profits or whatever you're seeing, that person has been educated to the point where they can do this on their own. We're just a helping hand to give out trade ideas and to take your trading to another level. If you're brand new, then to teach you foundation. If you've been around but you can't find consistency, then we're working on that mindset and some extra tools and price action tips and different things you can do to improve your accuracy. So this video that I'm about to give you was a video that I made this week. Obviously, if you are if you're in the States or in many countries around the world, you know that many of us are now quarantined in our own homes due to the coronavirus. So since we had some extra time, I decided to make this video. In this video, I start the video with the running entry. The entry is actually running. It was a setup that I had given the group on GBP CAD, and that entry was profitable. In the video, while I'm making this video, that update video, I get +1, meaning the market comes back and hits my stop loss. Now, if you don't know, I partial out in the market. So whenever something is in profit, I automatically make something. I don't necessarily have to cut the trade or drag the SL. If you have no idea what I'm talking about, you require more education. If you have no idea what that means to partial out of the market, to take percentages out of a profitable situation without cutting that trade fully or dragging the SL, you require more education and you need this group more than you understand. So partial out of the market, okay? And then I enter on the video. I let it play, it goes into profit, and then it comes back. And then I come back again, and then I enter again while I am on the video. Then the market gets even lower, okay? So we had 3 profitable situations in a row, 3 winning trades. The market gets lower. As it gets lower, again, I enter again and I tell you why and how. And you see that happening, okay? And then that goes profitable, okay? So at that point, we had 3 entries, 70 pips, 90 pips, 60 pips. And then the 4th entry was the one that was from the same position, the same place, using the same zone, the same direction, all that stuff. But that trade took too long to record. But obviously, you're going to see it's all tying together. And basically what I'm trying to show in this video is how structure, regardless of frame, is extremely important. Understanding your Fibonacci's, understanding what prices actually matter, having a plan, and also rules, right? Getting +1, but also making something. Allowing that market to redevelop itself and go through those cycles all over again for reconfirmation. And these are the little things that you're going to be learning in here. Now, obviously, I can't pack full-on details into one video. That would be impossible. But it shows you what it should look like, what it should sound like. It shows you where you need to be in order to find some sort of consistency and profitability. Now, for pipsologyFX, the group is $200 for the first month. And we had raised the price this year to $100 a month. Now, because I know what's going on in the world, we have replaced the price at $50 a month. So your first month is only $200, and every month thereafter is only $50. And I'll never raise it on you if you have a locked-in subscriber price for that number. I understand what's going on in the world. I understand people want to learn how to trade for that extra supplementary income and for sometimes your main income source. So this is our way of making it happen. And if you have a situation and you want to talk about it, DM me. Right? DM me on Telegram, DM me on Instagram. Do whatever you have to do to find your way into the group. For online coaching, for one-on-one coaching, one-on-one sessions with me, to have one-on-one time to get your questions answered, for us to break down the charts together, for me to be able to assess your history and be able to help you out that way, I have discounted all my prices. So contact me for that as well. I warn you right now, I charge a solid amount for one-on-one coaching. You know, that is a thing that I take very seriously. And I recommend that you go to my Instagram and you go look at years and years of history on my Instagram at #ZapzTrading, #pipsologyFX, and do your own due diligence. Contact who you want to contact. Do what you have to do to make yourself comfortable before you invest into anything. So that's pretty much it. Enjoy the video. As always, if you have any questions, pop them in the comments like, subscribe, share it with your friends. Make sure you're spreading good knowledge. Too many people out there, they spread education that isn't really educating anybody. They spread stuff that is just selling them something. Obviously, I am pitching my business to you. I don't hide that from anybody. If you don't know me, go add me on Instagram. You'll find out that I really don't care what anybody thinks. So I keep it honest and open. Obviously, I'm trying to grow my group. I'm trying to acquire more students. I'm trying to make money on something that I do really well, which is trade. So not only can I trade, but I can also educate. So that's a very rare thing. I understand my worth, so I'm always going to be building my business and building my brand. So I'm not hiding from that. But what I'm also doing is providing you some real solid knowledge here. You're seeing somebody work the market moment by moment. You're seeing how it looks, and you're able to compare from what you're going through in your own trading to what I'm doing. Now, also when you watch that video in its entirety, and if you watch previous videos, you know I really don't use a lower frame. But I wanted to show people that regardless of what you do in the charts, there is really no right or wrong. And if you really know what you're doing, you're able to adjust your expectation out of a trade and think a little smaller but still profit. Also, if you know how to manage correctly, you can profit out of multiple movements within the market. And last but not least, GBP/CAD, every entry there was counter trend, right? So it was a buy in what was a seller's market. And we still were able to pump out 500 pips out of that situation. So what does that tell you? That accuracy and understanding is way more important than a lot of the things that people focus on and regurgitate out there and just keep vomiting all over the Forex world. We focus on education and real understanding and consistency. We prove that regularly inside of the group and as a one-on-one coach and the free content that I provide you as much as I can without, hurting myself. But I am trying to help people out there. I know that a lot of you do watch these videos and you watch them again and again, and you ask me great questions in the comments and also on Instagram. You send me some great questions, and I try to help as many of you as possible. Hopefully this video gives you some aha moments and you're able to find yourself some more profits in the market during times where people really need them. All right, enjoy the video. Happy trading. Now, GCAD is active in entry, but it's probably going to get +1 here. Now, I took this buy. Remember, there we go, +1. So at the highest point, this thing was up about 183 pips. You know for damn sure that I partialed out, okay? You know for sure that I partialed out. So what I'm going to do with GCAD is I'm going to re-enter as I make this video, and we're going to check on it a little later. Give me 1 second. Hold on. Okay, so I'm in the market. Now, why am I entering on GCAD? I'm entering because I know that it broke this high and it's currently retesting, right? I already took the breakout time. Remember, if it's important on the way up, it's important on the way down. There was resistance here. I said this to you in the video. If it breaks that high, we're looking up, okay? We're looking up. Shit, I have to place a stop loss. Okay, so if it's important on the way up, it's important on the way down. Now, with GCAD, when we look, hold on. So when we look at GCAD, looking for that support, okay, looking for that support over that price. The reason is this price created a lot of resistance. We had a false breakout. Then we had a real breakout where it tested an old support. So now if we get support there, we are able to understand that the support that's down here is actually providing us some real bullish strength. This is right now a currently running trade, and we're going to see where it ends by the end of this video. But what I wanted to show you is that this critical price has been here before. So with GCAD, I told you if it breaks that high, you have to look for that up. Okay, so right now what we're doing is we're working the different levels of this drop and working them on the way up. That is what we're looking for. We're looking for this market to work its way up level by level. Now, recently, the market hasn't been doing that. It'll just straight shoot through stuff. So you have to know where you want to get in from before you do it. Also confirm. My confirmation for this was this, the higher lows. The fact that it falsely broke and still created another higher low that's slightly higher than the little breakout right there. See, that little breakout right here, you can only see it on N15, which is a chart I don't use, but it's right here, right? It's right here. The market is struggling here, okay? So the retest of that, right there. This is an old price of break, right? It's a lower frame thing, but microstructure matters, right? It matters. I don't really look at the M15, but I could see it on an H1. I could even see it sometimes on an H4. I've been doing this for long enough that happens. But we could see right here, right? Where this is a low, this is a high, it becomes another low, and then bang. So I'm going to take my trade at my higher frame breakout point, which is right here, bang. Now, when it retests, I'm going to do the same thing. Why am I not confirming it? One, because I wanted to show you a live example of what it looks like as I'm talking and doing this. How many pips is this up? This is up 30 pips now. Okay, so what I'm going to do is partial this down. By the way, I'm doing this on my phone. Okay, and that's that. And this thing is now up, my friends, 57 pips. 57 pips. We take our little SL here. We drag to the front. And ladies and gentlemen, that is what knowledge and experience looks like. Just like that, right in front of you, without an issue, 50 pips. Bingo. This was given out to you. This was told to you. Break of the high, right? There was a false breakout. It goes under, cracks back over. It gives you, if you're aggressive, 160, 170 pips. And then the retest, there's your other opportunity. And there you go, 57 pips. If it's important on the way up, it's important on the way down, right? You need to see the structure for what it is. And currently with GCAD, that's all I'm really worried about. With GCAD, all I'm worried about is whether or not it's working within the prices that I've deemed important. Well, Gustavo, why not this? Why not that? Because it can't be all of them, and because I've chosen the ones that I feel most important. Now, if I look at this in the bearish leg of the Fibonacci, and I do that, notice that that's the 38.2 of the bearish continuation. I'm throwing a lot of stuff at you right now. All right, I'm throwing a lot of stuff at you right now. That's the 38.2. A re-break back over that point is good, but we should definitely, of course, we're going to see a struggle. We're going to see a struggle on the way up because, one, this thing is bearish. Two, look, 61.8 bearishly. So it hit one of the strongest bearish points of the bearish flow of this market. So what I have to do as a buyer is allow this thing to structure up in a way where it gives me a chance to work towards that obvious target for some real pippage, right? 182 pips, some real pippage, and then give myself the opportunity to get in sharply so that I am in profit pretty much immediately. Did I make it up? Did I lie? Did I edit? Did I do anything to make you think that this wasn't a trade that I was just like, okay, here it is. This is what I've done already. Bang, in. That's it, right? The break of that high, that is an understood thing. Now, guess what I'm going to do at that 50 level, right? Once it starts cracking over that 50 level, I'm going to do the same thing. Not because if it cracks over that 50 level, not because I'm not going to confirm it. It's already confirmed. The false breakout here, this stuff working its way up, plus the higher lows, the respect of this price, it tests the 61.8 bearishly. So my thought process is if it still breaks over that 50, then I'm good. I am good. If it breaks over that 50, I'm good because bullishly, everything has worked bearishly already. And if it still goes up, that means the bullish strength is strong enough to carry me to where I need to be. Okay? And that's pretty much it for GCAD. I'm still bullish. I'm still going to be working the same zones. I'm still going to be understanding that it's going to be a slow crawl until it's not. And then I'm going to take the pips that I can take. So here, right there, that's 65 pips. That sounds like a freaking good-ass trade to me. Right? Quick little 60-pip trade right in front of you, using these highly volatile times to my advantage. Notice that it wasn't that complicated. I mean, obviously, if I'm able to talk to you and make a video, and do I sound nervous? Do I sound like I'm so worried? No. We enter, we place a stop loss, right? And then we +1 it when it's 30 pips up, and we partial down a little bit, and we let it play. Whatever happens, happens. I don't care about the rest. All right, so that's it for GCAD. Still looking up, still working my zones, still working my structure, and that's that. I'm actually going to alter one little thing here. Okay, because this market is so messy, I'm going to be looking for this thing to go back to the H1, H4. Okay, so we have an obvious point right here. Okay, that's an obvious breakout point, a huge breakout point. This zone right here has gotten really sloppy. So I'm going to slightly adjust it. All right, and I'm going to just do that so I know it's lower frame. So as soon as this all plays itself out, I can just delete it because it's cluttering my screen. All right, perfect. 50 level break, 61.8 break, and we're good to go. So we'll come back to this at the end of the video. GCAN. All right, it's still in play. I wanted to make this video very clear, right, on what it is one of my personal tools. I love to look at the market from that perspective of what prices are important, what I call sensitive prices, right? It's something that I aggressively teach my students, and now I'm teaching it to you. It's important because it's what keeps me patient. I know that the liquidity is there on any frame. If I'm looking to an M15, I know that the major movements have come from this point. If I look at a H4, I know that the major movements have not come exactly from that point. There's other points where we can work from that are much bigger. But for somebody who likes continuation trades like I do, like to add trades to the trend, that's how we do it. And I show you this stuff all the time, but maybe it goes over people's heads. So right now I'm making sure that it doesn't. Okay, and that's it for me on GJ, GCAD, Euro NZD, Gold. Not doing anything different as far as bias. I did make some slight adjustments as far as what I want in the plan, but other than that, there's one profitable trade for you right in front of your face. 70 pips on that as it struggles to work its way up because that is the way it rolls. Let me see, how many pips is it? All right, so 65 pips, and that's that. All right, happy trading. So I've just been +1 out of this trade. I am waiting for the next hour candle. If it closes within zone, I will, well, as soon as it closes, I'm going to enter as long as it's not below zone. So I've been +1, right? That hour candle was a profitable candle. Okay, it's that one right there. All right, now my trade was only about close to 70, like 65 to 70 pips. That's the most that I got out of that. But that candle alone went up for like 90 pips. So right now, I'm just waiting for the next hour candle. And as long as we are within where we are right now, I am going to enter. When I see you again, come on. When I see you again. All right, so this is why we don't enter the same hour candle. You see it? You see how it's working? We're going to let it create this low. Now I'm going to enter slightly under zone. All right, and that's that. We're in. So now I'm going to set a stop loss. I'll set a proper stop loss. Boom. All right, and that's that. Okay, now back in the game. Right, we're back in there. Now, here's again why. Remember, M15. This was my low. This was my high. Then it became my low again on a lower frame. Higher low creation. All that good stuff, okay? This thing is trying to tip off bullishness. And if it does that, I'm going to keep trying to get into this market. Now, right now, I'm in drawdown. Let's see how the trade ends. Do you hear me getting nervous? Do you hear me? Oh, my God. No. Just let it play, man. Let it play. Let it freaking play, okay? So many reasons why right now I'm looking bullishly. We've already covered it. We've already talked about it. But what I wanted you to see is kind of like what it sounds like, what it feels like, what trading is supposed to be. I mean, that's it, man. That's it. It's done. So now I'm going to actually let this play. I'm going to use the volatility that is our best friend right now to my advantage to make some good content here for you guys, to show you two trades, how they worked out, and how we use them. Using some micro frame, using some higher frame. Remember, the H4 is what's closing. H4 is really what's closing in the way I like. We got those wicks, right? We got that nice test of support. We get that huge bullish candle. I could even throw something else at you. If I measure this one movement, look at where the market is sitting on the 61.8, right? You could see it there. It's preferring that point. So that's why I'm doing all these little things, right? These are all the little tricks and details to be able to get in sharply in the market. It's not just support and resistance, okay? Now, notice I followed my rule. I didn't get it on the same hour candle. What did that do? It allowed the drawdown it allowed me to survive the drawdown without headache, right? Little rules, little things, little stuff that we follow. Okay, right now we're on slight drawdown, which is the normal way that things work. What I'm not going to do is sit here and stare at it. I'm going to go and have some breakfast or lunch now because it's 1 o'clock, and that's it, man. Let's see what happens, and I will give you the update. If this thing starts forming some structure, I'll probably like fast forward to when it gets to a profitable point, if it does, and then you know, do the final recap on this and close the book on this one lesson. All right, happy trading. All right, as you can see, this trade is now in profit. Okay, 70 pips. I'm going to partial that down, drag my stop loss, and another profitable trade just like that. Again, that's round 2. That's round 3. Round 1 was the breakout. Round 2 was the hour retest. Round 3 was the next hour close. Notice I waited for it to close and then I entered. Again, all working off the same information, the breakouts, the price, all that stuff. Managing them normally. And like I said, there's a lot of opportunity out here. There you go. 130 and going pips. Right now this thing is up 84 pips. And just like that, I really don't know what else to say other than follow the rules, follow your plan. This is a very in-your-face example of it. You know, a lot of the times I don't like doing stuff like this because I feel very handcuffed and I feel like, you know, like I just can't do anything else other than watch it and worry about it. But because the market is so volatile, I knew that making this video would be quick and fairly quick. So there you go. I really don't know what else to say. A live example of what it is we do and what I ask and what we ask of you guys as far as patience and how we break apart the information and how many opportunities are really in front of you and how emotionally in control you have to be. You know, a big part of it was waiting for that hour candle. That would have been the difference right there. If I would have entered right at zone, I would have suffered for that. Okay, but because it already went up, this thing still has some bearish flow. We wait for that hour candle to close. Waiting for that hour candle to close. I believe it's bullish right now, and as you can see, that ended up working out because this trade made it into the 80s, and again, another good 2-to-1 risk to reward on an entry. All right, now we let it play. We see what happens. I'm going to let this run for a little bit more as I complete my meal, and then I'll come back to check it out. Okay, happy trading. Okay, and it ends there. We've officially been +1. The trade was very profitable. Okay, it went about 90 pips or whatever, and then came right back. Now let's look at that lower frame real quick because the market is very choppy. So I want to show you how that looked. We could see it here. This was entry 1. Well, entry 2, this was entry 3, okay, and this one was really, really sharp because I waited for that hour candle swap over, and then the market came roaring back, okay. Now, what's the plan? Well, right now we are testing that critical support. I need that market to come all the way back in order for me to be able to take that buy all over again and start the cycle all over again. It getting back down to deeper supports, I'm okay with that, okay, I'm okay with that. But at the end of the day, the most important thing when it comes to trading is the plan. All right, right now I am purposely waiting for that 4-hour candle, for the 4-hour candle to close. Okay, it hasn't closed. We were working within the 4-hour candle. We worked the legs of the candles within this 4-hour candle. But now, as we get +1 for the second time, it's time to take a moment. Okay, take a moment, let it work itself out. You have some higher lows to work within here, okay? And let's see if it respects it. Remember, when we take that fib, whether we draw it on the 4-hour candle on the whole structure, this is the 70 levels, the 61.8. We're still within them. So you know what? If we get a false breakout of this trend line, Right now this thing's really bearish. We get a false breakout of this trend line and we close within that 70. We close within that 61.8. I am going to enter. Okay, that's going to be a thing. So look at where the market is right now. We're testing the body / the slight higher lows, right? What we need is for this market to close above the 70 levels. Right? If we can close above this trend, I'm going to make the trend line better. Right there. If we can close above the trend line, above the 70 levels, if we can get that hour, that next 2 o'clock hour to close within that level, I'm going to enter this market. Okay? I'm going to do that adjustment just for the sake of the video. Normally, I would give this to you guys beforehand, but I've already sent out the first update. I've already made this video had a purpose, and you guys already know what I'm looking for as far as the higher breaks. So I mean, you'll be able to catch that opportunity. But as I'm making this video, I'm gonna plan this out, right? I'm paying attention to the way this looked. I'm paying attention to the way the market structured up. I know that the market created support there. I know that the market in about a minute is going to create a brand new candle. And at that point, I'm going to pull the trigger on this because it's planned out, okay? 70 levels. And if it leaves before I get a chance, then it's going to have to climb all the way up to my price's desired. Now, that's that, okay? So hopefully this video shows you what patience and planning looks like, and then the understanding of why, right? Again, we begin that conversation of the whole structural integrity thing. Look, the support is here, okay? The support is here. There's support here. There's price sensitivity here. This thing is really choppy. It's hard. It's harder to work stuff like this. When it gets all choppy like that, where there's huge up and huge down all within the same 4-hour candles, and there's choppiness session to session, it is difficult to work that market, but not impossible. So let's see what it looks like. Okay, let's see what it looks like. That's the new hour candle it just created. I'm going to enter this market. All right, I'm going to set a stop loss. Hold on, let me make sure it's correct. Nope, I need 40 on this. 40, right there, boom. And that's it. We let it play. Okay, we're within the 70 levels of the micro frame Fibonacci. There's some nice support down there. The market is already, that's the manipulation point where it was looking like it was supporting there. And we were able to take those profitable situations here and here. Look, also, for the people who are tight on time, this is why I recommend higher frame stuff. I recommend it because, as you can see, they're short-lived, so you have to manage them correctly. On a higher frame, on an H4, this is the spot. All right, let's zoom in. On an H4, this is the spot. If I'm just on an H4, I have to wait for this thing to actually either support here long-term or climb all the way up. All right, so let's see what happens with this, and then we'll let it be that way. Okay, and that'll be the final example before I call it a day on this and move forward with my life. All right, happy trading. Okay, and it continues. Okay, so this is the new hour candle that was created. My entry, you saw it, and there you go. That went for about 50 pips. Look, I don't know how else to say it. Okay, right here, boom, 50 pips. Just like that. Stop loss is intact. I didn't change anything. I didn't do anything different on any of them. The only thing is this little setup here was something that I saw on the lower frame, so it was more momentary, but still planned out off of the same thing that we were talking about in the previous ones that we took from higher positions, from higher prices. Still at its support, right? Still respecting some sort of fib structure, still respecting a little bit of trend line work, sloppy trend line work, but it's still there. There is no perfect in this market. I don't believe there is, right? People try to get perfect markups. Well, I hope they enjoy perfectly reloading their trading accounts and trying to find some perfect trainings as the perfect years continue and they are not able to find consistency, profits, or perfection because it doesn't exist. You are going to be wrong sometimes. You are going to be right sometimes. You're going to be +1 sometimes. Now, on every single trade that I took, they're partial down. That's a rule for you guys. You guys know that about me. We take percentages out. I don't drag the SL. I partial out. There's a difference there. I don't drag the SL. I don't drag the SL. I treat it this way. Once I hit a target or a certain pip count, 2 to 1, 3 to 1, 4 to 1 risk to reward, I take some money out of that trade, especially if I'm against the current trend, especially if I'm working within volatile times. Because as I just showed you, you guys saw the first breakout, right? Let's go to lower frame because I can't really see much here. You guys saw this one. You guys saw this one. So that's 160. That one we're going to call it 60. This one we're going to call it 90. Okay? So let's say it's 300 pips. And then currently that one, 50 pips. That's 350 pips. Bing, 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 bing. All same day. All pretty much during lunch. The last three have been during lunchtime. And one after the other. If you're somebody who wants to fully TP, there you go. There's more than enough pips for you. If you're somebody who partials out like me, I'm taking percentage gains. For me, that works. I don't really care about the whole thing. I just care about percentage gains. That's my whole thing. A little bit every single day. And trust me, when you raise those lot sizes and you're dealing with some real risk, you know, you're seeing, by the way, I should have dragged the +1 already. I've already partialed this down. I'm going to do this right now. See, this is what happens when I mess up my routine and I'm recording as I'm talking and as I'm trading. So basically, what was I saying? I was saying something. Oh, so there's more than enough pips for everyone. There's more than enough pips. You can percentage out. You can TP fully. You can hit a target, whatever you want to do. Now, I'm going to keep working this zone. That's going to keep happening. All right. So I took 30% out of that 50 pip trade the first time. Right now, it's 70% of original risk. If it +1s me, I'm going to look for that re-entry. And that's that, man. So I thought this was going to be the last trade that I take, but if it +1s me, I'm pretty sure we're going to have another example here as long as it does what I need. So that's that. All right. So let's see what happens. Let's let it play for a little more. I'm going to go watch some movies or something, and then I'll be back when this thing plays itself out. Okay, so that entry got +1. It went up for 50 pips or whatever it was. Let's see it. Right there. And then came roaring back. Okay, why? Because the flow is bearish. Again, what do? We allow that candle to close itself, and the market closed within zone. Okay, it went under zone, false breakout of trend. That's the second time that's happened. The first time we get in, it goes up, comes roaring back, comes back up, closes within zone. I get back in. I don't even, what is this, fourth entry, fifth entry? I don't know, whatever it is. But same thing each and every single time. Now, it's showing you, I'm showing you how many opportunities. Also, what a +1, why I do that so consistently. You never see me not have that +1 once that thing is in profit. The only time that I don't leave it is if the market has tested and retested, tested and retested. I just partial it down to the point where I just want to participate in the trend. So this is it. This is going to be the last one, I think. I'm tired of entering. I'll be honest, if it wasn't for the video, I would not be entering this much. I just don't care. I don't care enough for me to enter and re-enter. I'll be looking for bigger moves, you know, bigger breakouts, stuff like that. That's what I normally like to do. But for the sake of the video, I just want to show you what structure and patience and some rules and understanding and confidence can do. You know, some of these trades broke into drawdown early as soon as I entered. Doesn't matter, right? I'm not going to stare at it. And then by the end of it, they're in profit, right? The +1, they get +1. I don't just blindly re-enter. I let it close within zone. I let it at least close, period. I allow it to give me a better price, okay? Slightly better price. When you work with the 30, 40, I don't teach anybody, I don't recommend anything more than a 50 pip SL, a stop loss, right? So when you work within that type of parameter, you got to be sharp. You can't allow for 100 pip drawdown on every single entry. So again, hopefully this is the last entry. I just want to drive the point home of what consistency can do, what it looks like. You know, we're using the same markup, the same understanding. You know, every single trade was a buy. Everything has been done within the same 24-hour period on the same pair. All these opportunities, you know, over and over and over again. All right, so I'll be back for hopefully one last update because I'm getting tired of this, right? But I'm hoping that you're enjoying it and learning something from this video. I'm hoping that that's a thing. So that's that. Happy trading. All right, so we're back. Now, yesterday we left off here, okay? We worked this whole high zone, this breakout point right here. We went to an M15, and I had to show you kind of what that looked like. All right, bring it up here. Right, I had to show you what it looked like to right there. Right, that was one of the entries. This one was another entry. They were both from similar zone. We were working in very tight quarters, but I was trying to show you like what control looked like, where we found support. Okay, and we took these entries, and everything was fine. During the video, like on the third go around, we marked up a lower zone, right? We marked this up right here. We spoke about these 70 levels, why they were important. We spoke about the Fibonacci, and that trade ended up going up for about 60 something pips, and then again for about 40 something pips, and finally breaking under. Like things got sloppy. Now again, there's no real losing there. Remember that we preach in here to +1 to let them stop you out. We preach to +1 means to drag the stop loss 1 pip in front of your entry, so you end up being break even on when they take you out of the market. There's no loss there. We also preach confirmation, right? We preach reading the structure of the market, so you could see where this market is getting lower and lower, and what's now a bearish market, and we're buying. So the market ends up going under. Now I did try it one more time, because I lost sight of the M15, and I'm just keeping it real. It got really sloppy here. We could see the hour closes getting sloppier and sloppier, and eventually a nice bearish candle, and that stopped me out at 30 pips. I got stopped out cleanly at 30 pips. And that was that. It tested a new low. Now notice that I didn't change my markups though. And remember that yesterday we spoke about in the group, in the earlier videos, about sensitivity of price and knowing exactly if you're good at your markups, if your markups are solid, you can use the same prices if you're patient. So the market, we worked it here, right? It worked all the way down, comes back up, starts supporting again. You already know what I'm going to do because I did that here, right? I'm going to buy again. Now I know right there, 200 pips upon the return, again, resupporting, bang, 284. All right, so the first 200 pip run I did not take. The next one, the return, this one I took, and I'm currently in. So now we've run through all these different buy entries from different positions. You could see how there's support there, right? You saw me go to a lower frame on these right here to show you a little something on that lower frame. But my point is this: if you want to enter the market, rule number 1 is going to be plan for the entry, right? Mark it up. You want to enter the market, rule number 1 is know where you want to enter from. You can't be someone who just reacts out of nowhere, like when you're leaning more towards luck and less towards trading. You have to make sure that you know where you want to get in from. Just realize that my markups have not changed. They didn't change. Nothing changed. My bias didn't change. Where I wanted to get in from didn't change. The way I approached it didn't change. You know, everything has a confirmation. For example, on these up here, because there was what looked like a breakout at that point, the return to that retest, that matters to me. Okay, that was something that mattered to me. When that market broke its way up, came back, I'm taking that buy. Okay, comes back down one more time, I'm taking that buy on the hour candle switch. Remember that? Okay, it gets really, really bearish. All right, we waited out a little bit. I did that with you because I got +1, so I did that on the video. I waited. Again, took that buy. Why? Because there's support down here. So took that buy, and eventually can't take the buy anymore because it's getting weaker to the upside and it's already bearish, so you're playing a low probability game. Okay, and if you take the loss, you take the loss. But as you can see, the recovery here, okay, support. There's a lot of movement here. Right? If I was that guy, 63 pips, 54 pips, 63 pips, finally, bang, 175, comes back one more time, 124. I don't use an M15, but because this thing is so choppy, I have to show you that on an M15 right now. Let me make this clear, I use an H1, an H4, a daily, a weekly, a monthly. I don't go under the H1, right? I don't like to look at the M30 and the M15. But in this situation, I just wanted to show you what it looked like. I also showed you an entry that was just a retest. But for me, I don't like getting in on the same hour candle, and this is why. It's unnecessary. It's really unnecessary. When that move is meant to be the move, you really shouldn't have to do that unless the market is fully trending. And the market wasn't fully trending yesterday, right? It wasn't. Now you're starting to see something, right? You're starting to see more structure, right? Look at the difference between this flow and this flow. There's a huge difference there. You know what the difference is? The difference is that this one is creating a firm support. This one never did that. Okay, this one had one low and no firm support. It just kind of worked its way up and then came shooting right back down to get more liquidity for the buy. That's really what that is. Now, even if you don't know what that is, keep it simple. What happened? Okay, it went under your zone of entry, it broke back over your zone of entry, went bullish without you, and still came back and supported over, which means more additional buyer strength. And that's it. All right, so you witnessed the break. No, you didn't witness the breakout entry. You witnessed the getting +1. Okay, so you knew I was in. That was what you witnessed. You witnessed me get in on the hour candle for a retest for 60 to 70 pips. You witnessed me get in for a 90 to 100 pip run on the hour candle switch. I waited for an hour candle to swap over, and then it went up. You witnessed me mark this up, right, and take a buy here that ended up going, now I don't even remember because it's just too much. Hold on. What was this? 60 pips. And then I re-entered again, and that went to like 40 or 50 pips. And then the one you didn't witness was the re-entry where I ended up having to dump that trade because it just got way too sloppy. And then the market went all the way under. And now you're witnessing the play out of this big movement because you already knew where I was getting in from. I didn't change anything, right? But what I wasn't going to do is sit here for the next 24 hours updating hour by hour because, you know, human being, not robot. But what I wanted to show you out of this video is what emotional control looks like, what planning looks like. I don't need this zone anymore. It's unnecessary. So that's that. Now we're working from a high. We're working from an obvious low. We have a fib structure to work with as well. From the low to that high. Okay, now we can put in some good work. Now we can see where this thing is going to land. All right, and that's that. Happy trading. I hope you learned something from this video. I hope you enjoyed this video. This video answers the questions of what frames do I like because I said it in the video. This video answers the questions of my preferred entry confirmation. Also remember that if I tell you, for example, look, we're waiting for a 4-hour candle store, clean support. I mean this. All right, I mean that. I mean real support. I mean that. Now, if the market is trending, you don't wait for stuff like that as much because it's trending. You wait for daily breaks. You wait for different things. But as a rule of thumb, you always wait for something, okay? The something is dependent on how fast the market is moving. One thing that's misunderstood by many is they think there's an absolute. What's the pattern to get in? Well, one pattern, one candle close, good luck finding that every time you want to get into the market. You need to know how to be flexible in the market, but intelligent at the same time. That's why you learn how to work the market in different environments. I got to get rid of this trend line. The reason is, the main reason is this, that the market isn't one way, ever, right? There's many different environments that you have to know how to maneuver. So in this video, I wanted to show you the different environments. I wanted to show you what a sloppy breakout continuation looked like, what an hour candle switch. I did that with you on the video, what that looked like. I wanted to show you how it could get really sloppy again, and you remark it up, and you relook at it, and you wait for price action, and you do it, right? You enter, you don't. Something else that's part of this video is, did you see me like micromanaging this trade? Either it wins or it doesn't, man. It's not something, you staring at the screen nervous, lower that risk if you have to, right? Lower the risk and let it play because your influence into this market is non-existent. Whether you stare at it, you sing at it, you put your underwear on your head, you cross your fingers, you look to the sky, nobody cares. The market will go up and down without you, whether you like it or not. So cut it out, enter the market, and let it play. Right, on the way back down, you didn't witness this part, but you can see it now with the way it worked up. Because obviously, if you thought that I was going to stay here for, if you thought that I was going to stay here for 13 hours marking this up when I started all the way over here, which would have been like a 24-hour thing, no, that's not going to happen. But that's it, man. There you go. Hundreds of pips on GBPCAD, same direction, good markups, same plan approach that I've been doing for years now. And on that note, happy trading.